Hello, welcome to the Trades Charge Out Rate Calculator information webinar. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Tradies need accounting assistance. This is very important for tradies, for accountants to realise that you can do a lot more work for them. And in fact, some of our subscribers are supplying services for over 100 tradie firms throughout the year, 52 weeks of the year. There's thousands of tradies in Australia, and you've probably got some of them as clients. But what are you doing for them beyond taxation services? What I'm going to talk to you today about is setting the charge out rate that will enable them to achieve their targeted profit. So tradies need accounting assistance, like all businesses do. But today the emphasis is on tradies. They need accounting assistance not just for the preparation of an annual set of accounts and an income tax return. They need assistance throughout the year. What assistance does the tax return and the annual set of accounts give to a tradie to run their business? Is there any analysis of the productivity hours achieved by each of their team members? Is there any information as to whether they established a charge out rate that had any chance of achieving their targeted profit? And what's happening generally within the business? Do they have a vision? Do they have a business plan? Have they got any budgets? There's a whole range of services that could be provided. Now, you're going to have to promote and sell this concept to them, of course. But many of our clients, subscribing firms, are doing that quite successfully. So the key subject that we want to really concentrate on today is their charge out rates. Because over the years, I've acted for a lot of tradies as an accountant and later on as a consultant. And I've asked them, how do you set your charge out rates? And you get some vague looks and some very vague answers. I think a significant number of tradies basically have their ears open when they're in the pub or the club on a Friday afternoon and listen to what their competitors might be talking about on charge out rates. Now, that can be very dangerous because they don't know the intimate details of that other business, what their productivity percentages are, what their markup on purchases they make on behalf of their clients are, what they're doing with that money. Are they subsidising the charge out rates, or are they treating as a super profit? Every business should be doing its own exercise to determine a charge out rate based on their own set of circumstances, their own expenses, their own productivity percentages that are being achieved. So the first thing to determine is the profit. That needs to be determined. And then everything else is built around trying to achieve that profit figure. If you can do a bit better, that's great. And it needs to be measured during the year. So there's a need to be analysing the key performance indicators or the business metrics to make sure the targeted profit is going to be achieved. So how many tradie clients does your firm have? So I've said before, most accounting firms have some tradie clients. And how do your clients set their charge out rates? Have you ever asked them? Why not run a bit of a quiz? Probably too late now in this year, but early next year, as part of the new year promotion. Send an email out or make a phone call round to them. Just ask them, how do you set your charge out rates? Have you set them for the 2025 calendar year? Do they need some assistance? You might be pleasantly surprised with the response that you get. And assisting your clients to calculate realistic charge out rates, and then the monitoring of your clients' key performance indicators and other business metrics is the commencement of the offering of 52-week business enhancement system, which is so important because SMEs need assistance on financial and commercial matters, in addition to income tax and the tax return. Not as a maybe, they really do need advisory services on financial and commercial matters. Setting charge out rates is nothing to do with the tax legislation, is it, or the tax return? This is a commercial matter for your client. They may not want to be the most expensive Sparky in the suburb or the town where they operate from, but they probably don't want to be the lowest either. So you can assist them on this journey. I love the ESS BIZTOOLS Tradies Charge Out Rate Calculator, was a comment by Amanda Gascoigne, a well-known accounting industry mentor and coach, in a webinar that we presented a couple of months ago. I love the ESS BIZTOOLS Tradie Charge Out Rate Calculator, Amanda said. She was very enthusiastic about it too. Why is she so enthusiastic? Because Amanda Gascoigne mentors accountants, a lot of them very small accountants, sole practitioners. And a lot of them have got tradie clients. And Amanda was getting the message across to them, there's more services you can provide to your tradie clients, indeed all SME clients, but let's concentrate on tradie clients at this stage. All you've got to do is start talking to them and ask them, how do you set your charge out rates? We've got a system which will help you set it, and we can show it to you. And we can sit down and prepare that analysis fairly quickly and give you back the report. Amanda went on to say there are significant opportunities to assist tradie business operators to improve their business. That's what I've just been referring to. By proactively advising them on the calculation of charge out rates. She was very enthusiastic. I hope when you have a good think about what we're presenting to you today, you'll be enthusiastic and say, gee, I want to get on board on this. I want to be able to offer that service to my tradie clients. So the key components of the tradie charge out rate calculator are the labour on costs. Over the years, I've discovered that when tradies set their own charge out rates, and I ask them how they did it, they'll tell you the rate of pay they're paying. Sometimes they've got really no idea on productivity percentage. And I get a bit nervous when tradies are telling me that their team will achieve very close to 100%. I just shake my head and say, I don't believe you. Doesn't happen. You might get 90% if the tradies are having everything given to them, so their jobs are lined up, their tools are there, all the ingredients they need for whatever their process is, so that they don't have to wander around the factory or the workshop or whatever looking for parts and looking for equipment or looking for tools that they need to use. They're all there within hand reaching distance. They might get 90%. Have you gone and sat in the factory of your client to observe how they actually run their business, how the tradies work? It's a fascinating exercise, you know, for us accountants. I've done it on quite a number of occasions. It's a great exercise to see what is happening and how some people can be far more efficient than others. So the labour on costs are important, going back to there, to make sure they're factored in. Now, we include long service leave, and some people say to me, oh, well, we mightn't have to pay it until someone's been with us for 10 years. That's true, but it is a progressive cost building up. And I think you should be charging for it, and then trying to put that extra money you've charged to your clients into a special bank account. So you're building up a provision to pay that long service leave, because it could be a figure of what, $10,000 to $20,000 by the time it has to be paid out. It can be very expensive for tradies, especially very small tradies. It can be a difficult time for them. They have to think through what they're going to do, especially if they've only got one employee, and now that employee's up to the 10 years. Now, in some industry awards, of course, the long service leave's actually paid into a fund because the employees carry that benefit wherever they're working in the industry. And so their various employers have been paying it in. So it is a direct payment. But in others, of course, it's built up, and if the employee's still with you. At the end of the period, what it might mean if you build up too much of a contingency fund for long service leave, you may have to cut back what you're progressively charging for a while. That's up to you and your client to discuss. What's the wages and salaries being paid? That's pretty straightforward. The gross amount, of course. I saw one tradie set it up at one stage, and I thought, geez, those salaries are a bit low. Then I realised it was the after tax. And I said, why'd you do that for? He said, oh, I forget about the tax. So the working hours, what's the expected working hours? And when you're looking at working hours, we are trying to get back to what are going to be the chargeable hours? What's the base? So if there's allocation for training or mentoring services or professional development courses that various team members have been authorised to attend, we need to be deducting those hours to get back to what's the remaining hours that the productivity percentage is then calculated on. And what are the overhead expenses for the business? What's the reasonable estimate? You've got the previous year's financial account, but make sure you go through it. There may be certain decisions that have been made that are going to change what the expenditure is in the next 12 months to what it might have been in the previous 12 months. And what's the value of estimated purchases for clients during the year? A significant number of tradies buy components for a vehicle or a house that they're helping to build parts of it. They buy those for the client because it's a lot easier for them to buy them, install them, and so they're using their resources, the tradies, to actually buy that product from the supplier. It's then charged to the tradies account by the distributor, and then the tradie has to charge it on to their ultimate client. Do they put a markup on that? There's a fair bit of work going on there. The tradies had to have someone go and select the light fittings or the floor coverings or the paint or whatever. And then it's getting charged to the tradies account. Tradie has to pay it. What's the markup that the tradie wishes to charge? I think it's best to have a standardized figure. So let's say it's 10%. Let's say there's $1 million worth of purchases. The tradie estimates that they're paying through the year for their clients. So 10% of $1 million, of course, is $100,000. What happens to that $100,000? Is that treated as a super profit, or do they use it to subsidise their labour charge-out rates? Or do they want to keep some of it for a holiday? So they say, well, we'll allocate 50% of the super profit as a subsidy on the charge-out rates, but the other 50% we want to retain as a super profit. So obviously at the end of the year, we want to earn, in those case I just gave you, the targeted profit plus $50,000. Our system will then enable you to insert your targeted profit for the year. Our system says that you can calculate it as a percentage return on the value of the business that you estimate. So if the business is worth $500,000 and your client's happy with a rate of return of 20%, obviously it's $100,000 profit is the target. And then everything else has been set to ensure that the business will achieve that 100%. Sorry, that $100,000 target. The system will then tell you what the projected income to be generated by each team member is over the year. And that's going to vary, of course. And we have a financial forecast which then reconciles with the targeted profit. Now, the 52-week business enhancement system is an opportunity for you to introduce an ongoing system to assist your tradie clients. So you set the system up, which means that the weekly productivity hours for each team member are going to be available and should be inserted, and the percentage then calculated, so that there's a continual comparison being done back to the figures that were used in setting the charge out rates, the budget. And if you find that you were working on charge out rates for tradies, say of 90%, they're the ones that have got everything laid on for them and just standing there grabbing product and tools and packaging and anything else they need without having to go around a workshop looking for it, because that's what really wastes tradies' time. But you find that their productivity's fallen to 80%. There could be valid reasons for that. Maybe the person that was keeping up the supply of those resources that I just mentioned has been off sick or has left, and the replacement person's nowhere near as efficient. There could be reasons. Maybe that replacement person needs some training and motivation. But you might decide with the client, well, we really should change our charge out rates to 80%. It's quite easy. You just reprocess. Just check the overhead expenses, check everything else, and you've got new charge out rates. Now, it's a bit late to go back and come out with a new charge out rate for services that have already been submitted to a customer or in quotations. But for new work, you've got the opportunity of picking up from a problem. Because if you had budgeted at 90% productivity, but you've now found it's only 80%, there is an undercharge occurring in the charge out rate, isn't there? So the quicker you adjust for that, the better. And that's why we really are suggesting that you implement the 52-week business enhancement system. That's subject of a separate webinar. In fact, we presented that webinar yesterday in this series, so it's on our website under the heading 52-week business enhancement system. Have a look at it. Because this is important, because in business, the tradies and in fact, virtually every other type of business in an SME land are not really conversant with the profit and loss accounts and balance sheets. They don't sit there studying them, but they understand percentages. They understand what individual team members can do. They know that some of them can only be 60% productivity because they've got other jobs to do. They're either supervising or they're training or they're attending courses. And if there's variances, they can accept that there's a need for change to be made. So having the ability to compare to the targets all the time is very important. With the 52-week enhancement system, we then get preparation of monthly financial accounts. And this will give you a detailed analysis that you can sit down with your client and say, well, we didn't achieve our budgeted target for profitability for the month because the productivity was not as good as what we budgeted for. Overall, we fell short of charging 200 hours in time and an average charge out rate of $130. So that represents a significant amount of money. The real benefit of all this is that your client is able to be shown this as it's occurred, not 6, 12, 18 months later, which might be the case if they're only relying on the annual set of accounts and the tax return. They're confronted with this issue, say 2 weeks after the end of the month. Here's the situation. We set the targets. You agreed to them. The team members agreed to them. They were going to achieve 90% productivity. They've only achieved 80% productivity. It's changed the whole scene. We need to adjust. This is real accounting work. This is what happens in larger businesses. I was the chief financial officer and company secretary of a listed public company. And this costing exercise, as we call it, was ongoing all day, every day, analysing the figures. Could things be done differently? Your clients think about this, but in lots of cases, they really don't know where to start, and they haven't got the spare hours. And if their business was a bit bigger, they'd have someone like you sitting there full time who they could ask to do these calculations. In fact, it would get beyond asking, it would just become part of your role. So you would do these adjustment calculations for them and say, well, for this group of tradies that we did their productivity at 90%, it's only working out at 80%. So instead of charging $130 an hour, it should be $141 per hour if we're going to achieve our overall targeted profit. And that's what we should be coming back to all the time. Now, I know in the marketplace there might be difficulties. Whether your clients' customers are going to accept these charge-out rates, but at least we are outlining it to them in a systematic way. This is what you should be doing if you want to achieve that budgeted profit. Now, if that's not possible, it might be other reasons need to be examined. Maybe the team members are just too slow. So if a job that other contractors are able to successfully do in an hour and a quarter, but your clients are taking 2 hours, customers will wait to that and say, no, you're just too expensive. It mightn't be the hourly rate that's showing up, but it might be the time that's been taken on jobs. So this is why these figures need to be continually dissected and analysed, and you would be making reports back to your client. So we're reviewing the assumptions that have been made. We have one of our subscribers some years ago join us, and he said to me at that stage, I've got 10 tradie clients. And he said, I've heard you've got a tradie charge-out rate calculator, and a couple of my colleagues have told me that it's quite good and I should look at it. Well, that guy became a subscriber, and he now tells me he's got 120 tradie charge-out rates. He also introduced this concept of regular financial accounts. Probably didn't call it the 52-week business enhancement system then, because we hadn't come up with that terminology or the full system that we now got. And they were then able to look at what they were doing for their clients and what the overall results were going to be. And as part of that, they charged them more money because they were doing more work. The average client was paying $8,000 more, $8,000 to $12,000 was the figures that were quoted to me. So he's now got 120 of these clients. So they've generated $1 million worth of income for their firm out of being proactive with tradies. Something to think about, I think. So let's now go to our website where we're going to have a look at a tradie charge-out rate calculator. So I'm now on our website, and what we have here is ESS BIZTOOLS has 4 main packages, starting with the advisory intro. And then we move into the starter package. So everything in advisory intros goes to starter package, and obviously new materials introduced. And then starter package rolls into advanced package, and there's new material introduced here. And the advanced package then rolls into the financial forecasting package, where they've got the benefit of the 3 previous packages plus more information that's introduced there. And our system is now showing what's in the advanced package. And if we click onto any of these items, we'll get the details. Down here, we also have a list of the subscribed content that is included in the system. We go onto the site. We've already got some other webinar recordings that we've recorded over the period. And I'm just going to find the link. So this is the template for the tradie charge out rate calculator. There's some instructions which you can read. If you're a subscriber, you'll be able to read all those. We then go to the calculation of the labour on costs. This has been set up to make sure labour on costs are being reflected in the charge out rates. So the concept is what we're looking to record is annual leave, any shift work or annual leave, holiday pay loading, statutory holidays, personal and carers days, superannuation, payroll tax, work care, and the training allowances, and the long service leave, which obviously depends on the states. And we have in each of these boxes 6 separate classifications. So if these various people were identified as having particular benefits relating to annual leave, statutory holidays, superannuation, payroll tax, etc., they would be listed separately. So we've got, in effect, 6 of these, and there's 6 in each. So you've got 36 different setups that you can have of employees on their benefits. We then have similar classifications for the permanent part-time employees, where you insert what their benefits are, and then the casual employees. We have details for them. We then move into the calculation of labour budget, and those same reference numbers are used. So whatever you've called A11 back in the labour on costs, it now comes through here as to the names. And what you've got to do is insert the number of people. So the first one is normally the manager. So it's presumably only one of those, and you then have the salary, $130,000. The system then does the calculations. The next insert you're going to make is what is the productivity percentage that's been factored into this person. So if that was the manager, it might only be, I don't know, 40%. System then calculates the hours. And that's how we work through. So your role is to insert the number for particular classifications, what their gross salaries are, and all this other information has been collected in the labour on cost calculation. In the labour on cost, there was an on cost percentage calculated based on that composition that was applicable. And that way we determine what the costs are. So we just go through here, and at the end, the summary gives us what the targeted business productivity percentage is, and then we can move into the return on investment. So if you believe the business is worth $500,000, you want a 20% return, obviously it'll tell you we need to earn $100,000. There's then provision for the overhead expenses. We haven't inserted the details. You can go through and insert that. When I'm doing trial runs, I normally just insert the total amount. The budgeted materials, this is when we look at how much we're going to spend. I said before $1 million, so $1 million, and the targeted markup is 10%, so you'd have there $100,000. What percentage of the markup is used to subsidize labour charge-out rates? Well, when we discussed it a little bit earlier, I said 50%. You could have zero. You could say, no, we're going to retain all the super profit. And then the system will tell you what amount's been used in the labour charge-out rates and what amount's been incorporated as a super profit. We can have write-ups or write-downs if you want them in the calculation. Just insert them there. And the system then does the calculation as to what's the recovery of labour going to be, including the on-cost. We've put the information in. So what's that all cost? Is it $1 million or whatever? What's the return on investment? We said $100,000. What are the overhead expenses? Let's say they're $500,000. Totals that. And whatever's been done about the markup and allowance for write-downs. So the system's saying this is the amount of money, which might be $2 million, that has to be recovered from the labour charge-out rates. The system then goes through base time calculation. So there's a couple of calculations here that just happen automatically. What we're looking at there for each team member, the A11, A12, A13, etc., is continued across from the labour on-cost calculation. The system transfers across what the total labour costs are for that person, what the hours they're going to work. So we do a base cost per hour, the total chargeable hours, and we've got a base cost per chargeable hour. Now, you don't have to worry about that. The system does it. We then got the business overhead factor, which is the total labour to be recovered divided by the base cost chargeable hours. So that figure is determined. And the system then goes through and determines the charge-out rates. It rounds them off. So that's why the final figure, whenever agrees to the actual dollar as to the targeted profit, because there are rounding off adjustments that have been made right through. So you get a full list again, going back to who was A11, who was A12, A13, A14, A15, A16 might be blank because you didn't fill any of them in. And when we go into the A21, and we might skip down then to A31 or 2, and so on. And then at the end of the exercise, we have a proof. So we have again, the classification of who A11 was. We said he was the manager, and then what all the other people were, what the hourly charge-out rate is going to be, and that's the rounded off rate, what the chargeable hours were calculated to be, and what's the targeted income from this person going to be, these persons, sorry. So we go through and we get the total add. Then we move into the budgeted profitability. The system will then tell you what are the sales going to be of materials. So the materials are the $1 million that you've purchased on behalf of your clients. You've added 10% of that to that, so that'd be $1.1 million. The labour, I think we said before, was $2 million odd, so $2 million, obviously $3.1 million. If there's allowances for write-offs that you've put in, that will then be adjusted. What's the materials cost? Well, that's $1 million. The labour on costs were $2 million. Cost of sales, gross profits determined, gross profit percentages calculated. The overhead expenses, we said 500,000, and we got the forecast net profit. That's the forecast is compared to the targeted profit, which was $100,000, and whatever's happened on this super profit. We said we were keeping 50%, didn't we? When we talked before, we said the super profit would be 100,000, 50% of it would be utilised to subsidise the labour costs. That's all been reflected in the calculations now. But $50,000 if it's a super profit. So the figure here should be about 150. Well, that's going to say 150,000. The actual figure here will be about 150,000 because of the round off that's occurred in some of those charge out rates. So that's the system. You could then say, okay, we will review this every month, because by that stage we got the actual productivity figures, which we've got a separate schedule for that, where you'd record that. And you can say to your client, well, the example I was giving you before, the tradies, or that group of tradies that we thought would be 90% productivity, they're only achieving 80%. We've changed that. We do the new calculation to see where we're at. Can you use that with your tradies? I think you can, and I think you should. If you want a worked example of that, we have it in the system, and we would be happy to send it to you. Just send me an email, peter@essbiztools.com.au. Now I'm just so we've done the overview. So all of the documentation mentioned is available within the Tradies charge out rate calculator. So whenever I run these presentations, I get emails or phone calls saying, hey, Pete, what's the income we're going to generate from this? So based on my experience as a senior partner in an accounting firm and as a chief financial officer in a public company, the estimated fees to be generated by the utilisation of this trades charge out rate calculator, I think, could be $1,000 up to $2,000 per client assignment. You sit down and have this discussion with your client, you feed in all the information, you do the processing. There's easily $1,000 in professional fees. By the time you have the discussion, the client says, can we fine tune it? Instead of doing 90%, let's make it at 87% or whatever, just to see what the answer is. Or how about we up the return on investment to 25%? What difference is that going to make? $1,000 to $2,000 per client. The big question then is, I was going to say, how many tradie clients have you got? But I think I'm one slide out of order in saying that. But okay, if you implemented the 52-week business enhancement system, which means you're doing monthly accounts and you're analysing all this based on what one of our other subscribers has achieved, I think you could generate an additional $8,000 to $12,000 per client over and above what you were charging them for an annual set of accounts and a tax return. Now, as part of the BizAid promotion by ESS BizTools, because we're very concerned of what's happening out in SME land. There's a lot of problems. High interest, high inflation, high failure rate. A lot of tradies not getting paid because of business failures. We think the tradie charge out rate calculator is a very proactive commercial service that you can offer to your clients. So we have discounted it. So normally we would charge this charge out rate calculator as a standalone product at $300. We've reduced it by 50% to $150. You can buy that as a standalone, plus GST. And there's no limit on the number of clients. If you've got 20 tradie clients, you can use it on each of them over the next 12 months, and hopefully for a long time. So how many tradie clients does your firm have? 10, 20, 100? You think about it. How many of these would you expect to retain your services as a trades charge out rate calculator? Well, initially, Let's say you got 20 of them, 25%. So you got 5 clients, could generate $5,000 to $10,000 extra in revenue. And if you happen to switch them across into the monthly accounting, the 52-week business enhancement system, there's a lot more, isn't there? You calculate your rate of return on an investment of $150. So you're ready to take action. I know it's nearly Christmas, but we've got a great special for you before Christmas Eve. Please go to our website, www.essbiztools.com.au, and click on packages and pricing, and then click on the individual products, the trades charge out rate calculator. You can then complete the subscription order form. It's as simple as that. If you need more information, please send me an email, peter@essbiztools.com.au, and we'll respond to your questions. Or you can telephone me on 0747 24 118. Thank you for your interest in the Biz Aid by ESS BizTools. We look forward to hearing from you. And I take this opportunity of wishing you a happy Christmas. And I hope that 2025 is very prosperous for your firm, your team members, your families, and your clients, of course. Stay safe. Have a great day. Goodbye.